Hey everyone, Strongman here. Welcome back to my channel, everybody. I'm on vacation, but you know what? I'm kind of freaking bored. So you know what I'm gonna do? I'm gonna do some fundamental analysis of some Chinese stocks. That's right. My big three are Baba, Alibaba, JD my AD, and Tencent my Incent. That's right. Because a lot of people think Chinese stocks have gone down. I mean, they have gone down. It's not you don't think it. It's the truth. But they think because these stocks went down that they're just complete trash. Well, I'm going to tell you over and over again, ladies and gentlemen. China is one of the fastest growing economies in the world. Okay, they're going to be the largest economy in the world at some point. America, and I guarantee you, some of their largest tech firms and retailers are going to benefit from that. You may not believe me because the stock went down and you're just buying Tesla like a total freaking clown. But I disagree. And I have the patience to accumulate some of these stocks over time and just hold them for 10, 20, 30 years. Don't care. So, what we're going to do in this video, we're going to do some Ghetto fundamental analysis. Now, what I'm going to do is basically a screener. You use this to kind of screen roughly what you think the fair value of the stock is. Then you go and do your research. So if I get a buy point for a stock, that doesn't mean it's a buy, and that doesn't mean it's not a buy. You need to look at it, see if your assumptions are reasonable, and then go do freaking research. Okay? So we're gonna start with Baba Mayama. Baba Mayama. So first we're gonna start with Alibaba stock, okay? So it's actually pretty easy to do this if you actually know how to make the tracker. So this is a fundamental analysis tool that I made at work, and I'm going to sell it for $10,000 a month, subscription based. It's a little bit expensive, but if you could actually buy good stocks, it's worth it. But no, I made this at work, and it's pretty simple, really. Okay, I have some assumptions, some plugins here, and down here I have the calculations, the math to how I reach the share price. So ultimately, whatever numbers you put in here will result in a buy price for the stock. Okay. And I haven't done this beforehand, so I'm going to be embarrassed if Baba's numbers are low. But we're going to go ahead and look and analyze Alibaba. So I pulled up Alibaba's revenue by revenue. Okay. So the first thing you want to find is the trailing 12 months of revenue. So Baba made $127.892 billion. So 127,892,000,000. Make sure I'm sharing my screen, by the way. Actually, I hope this isn't in Chinese currency. No, it's in dollars. Okay. Let me make sure I'm sharing my screen. Okay, good. So China's 12-month revenue, trailing 12 months over the last 4 quarters, was $127 billion. Now, once we have our revenue, we can assume that it's going to grow at some rate going into the future. What rate is that? I don't freaking know. Let's look. So you can see the revenue has had pretty variable growth rates. We got 100% revenue growth over the last 12 months, 46%, 36%. For this scenario, I'm going to assume that Baba's revenue grows at 20% going 5 years into the future. So we go back to my handy dandy tool and we say 20%, bro. 20%. Okay. The next thing we're going to do is shares outstanding because we want to see how many shares the company has. Now, if you own 1 share of Baba and then Baba issues more shares, you become diluted. So obviously we want to look at how many shares are outstanding and then project how many shares are going to be outstanding into the future because that has an effect on the stock price. So let's see. Shares outstanding, $2.724 billion. 272. See, these freaking max kill me. 2724. Okay. Next, we're going to look at share dilution. So we can see, what is it, year-over-year quarterly growth. It seems like they're diluting. So just to be fair, we're going to say, they've been issuing a lot of shares this year. Interesting. I'm going to say the historical average, we'll go with 2%. You can see they issued a bunch of shares in 2014, I think that's when they went public. Or they got listed. But if you look now, I mean, over the 2017, 2018, 2019, it was about roughly 1% share growth rate. And then recently they've been pumping out shares like crazy. So I actually think they're going to start doing buybacks from what I hear. So we'll just be generous and we'll say there's a 2% share growth rate. Okay. So what do we have here so far? Next, we need profit margin. Because at the end of the day, if you own a business, you're collecting the profits of the business. You want to pay a certain amount of money, and over time, you get money coming back to you. And the less you pay now, the more profits you get, the better your return. So let's look at margins. Margin. Do you think Jerry LaFufu does this really? So trailing 12-month net margin. So it looks like if you look at historical trends, and recently the margins have dipped to 15%. But if you look at historical trends, I would say it's going to be 20% roughly, maybe 25%. But we'll be conservative here. We'll say 18%. 18% margin. Now ignore this other stuff because this is like free cash flow. Like I haven't done that yet. Now, price to earnings ratio at disposition. I think for a company that's growing revenues 20% roughly per year, a 20 PE is pretty reasonable. I mean, the higher your PE, the higher your stock price is going to be. I mean, look at the difference. So at a 20 PE, when you sell the stock, it's a $243 buy. At a 30 PE, it's a $329 buy. So if it's trading way below that right now, it's a screaming freaking deal. Okay. We'll go with 20. We'll go with 15. The market's historical average. So here we have the revenue. We have trailing 12-month revenue, $127 billion. We have 2.47 billion shares outstanding. We have a 15% discount rate. So for a 15% return, according to this model, you can buy Baba at $187. What's Baba trading at now? Like $90. Revenue growth, 20%. Profit margin, 18%. PE at disposition, 15. Now, let's say I'm wrong. Let's say revenue is 10% going forward and profit margins 12%. Okay, well now it's probably trading roughly at fair value if you want a 15% return. So basically, if you buy the stock right now, or based on how the stock is trading right now, you could say that people are priced in a 10% revenue growth going into the future and a 12% margin. Okay, to me that seems like it's a little too low. But even then, you're still going to get a 15% return. So, in my humble opinion, I would say revenue, just to be conservative, 15%. Profit margin, we'll call it 15. PE, I think it's going to be at a higher PE than the average market. And share dilution, 2%. So, for a 15% return, it's a buy at $160. I don't know, guys. You tell me what you think, okay? Next, we're going to do JD. So let's see, JD. No results. What is this? God, my freaking nose is bleeding. Stop bleeding. There's just snot coming out of my nose. Got freaking allergies. Here, let's do it this way. It's such a freaking pain. JD macro trends. So here's JD stock. Okay, another Chinese online retailer. And I haven't done any research before. Okay, this is me just I haven't looked at this stuff in a long time. So JD's trailing 12 months revenue is $143 billion, $143.798 billion. 143.798. See how hard this is? And this is just a screener. I mean, you can do this and just get a common sense picture of, is the stock overvalued or not? I know it's freaking hard. Next, we need the shares outstanding. So shares outstanding, $1.593 billion. God, this freaking max. 1.593.000.000. Okay. So now let's see what the share growth is. So it looks like So it looks like with share, they've had some periods where they've issued a ton of freaking shares, and then there's other periods where they haven't. I would say, looking at these numbers, we can assume, we'll be nice. We'll say 4%. Okay, now let's go find the profit margin. So we have margins. And we have trailing 12-month net margin. So for a while, this company was unprofitable. And eventually it turned profitable, looks like in 2018. So the margins are pretty low. This is not a super profitable company. So I would say, just to be conservative, we'll say they'll have a 2.5% profit margin. Nothing crazy, okay? 2.5. Okay, now let's look at revenue growth assumptions. Revenue and profit. Revenue and profit. So revenue's growing pretty freaking massively. Okay, we got 36%, 64%, 50%, 38%, 32%. But to be conservative, we'll say 25%. Okay. And remember, this is one of the fastest growing economies in the world. And then PE at this position, 20 to 30, somewhere in between there, because this is a faster growing company. Now, for a 15% return, it's a buy, according to this model, at $69. What's it trading at now, ladies and gentlemen? 50 something? But strong man, the stock went down. You don't understand. Okay. Last, we'll do Tencent. Let me check the stream to make sure everything's okay. Everybody see me? Everybody can hear me okay? Let's see any interesting comments. No. All right, now we're going to do Tencent. Now, I actually have never done a fundamental analysis of Tencent. So what happened was I remember a couple of months ago, Tencent dropped like 10% because of some stupid news article about gaming that came out. And I was like, okay, this is stupid. This is just a temporary thing. So I put $1,000 into Tencent. However, I'm looking at it again now, and it's even cheaper. Like, I'm down on Tencent, but I can guarantee you it's probably a good deal. So I'm not saying you got to buy any of these stocks, okay? You'll be just fine maxing your tax advantage accounts and buying index funds. So let's do Tencent my incent, right? JD my 80. Let's go Google. Tencent macro trends. You see, I don't need to listen to any people that do hedge funds and this and that crap. No, I can just do this. It literally takes me 5 minutes, and I can screen out stocks that are hot freaking garbage. Excuse me. All right, let's see. Please have some information in here. Okay. So first of all, what is Tencent's trailing 12 months revenue? $68.153 billion. 68,153,000,000. Shares outstanding. How many shares do they have, bro? How many shares? Oh my God, look how much their shares are freaking going up. So they currently have 9.708 billion shares outstanding. 9,708, okay, $5. Now let's look at their margins. Net profit margin, 40%. Jesus Christ. So it looks like Tencent is very profitable. So Baba's decently profitable. JD is not very profitable. Tencent's pretty freaking profitable. Okay. You can look 28, 30, 28, 30, 25, 25, 30, blah, 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 blah. So to be conservative, I'm going to say they have a 25% profit margin. So 25%. And, oh God, these freaking Macs kill me. Okay. Revenue growth. How's their revenue by revenue growing? 40, 20, blah, blah, blah. Looks like it's all over the place, but I would say we could use, maybe 20% would be reasonable. I mean, it's pretty conservative, but whatever. And PE at this position, to be conservative, we'll say 20. So right now, using these very conservative assumptions, well, actually the share dilution, how much are they diluting their shares? Probably pretty bad. Actually, no. What is it? Year over year quarterly growth. They're not really diluting super bad, it looks like. So we'll say 1% just to be safe. So right now, if you want a 15% return according to this model and use pretty conservative assumptions, the 20 PE a 20% revenue growth, which this company has shown to grow that a lot faster. Discount rate of 15%. Share dilution probably higher than it's going to be. It's a buy for the next 5 years at roughly $51. What's it trading at right now? Now, you may say, Strong Man, you're so stupid. You can't value Chinese stocks like American stocks because American stocks went up the last 10 years. And sure, there's going to be trade tensions. But if you really think about China, long freaking run, and by the way, it's $42 right now. If you really think about China, long run, it's going to be a massive, well, it's already a massive country. It's going to be the biggest country in the world economically and by population, at least till India catches them. To me, it's common sense that if you want to speculate on stocks, and I'm not saying put a lot of money or any if you don't want to, these Chinese stocks may not be a bad consideration. You just have to have the balls to not freak out when they go down massively. But every time I do these analyses, it's just like, okay, I mean, I don't get why people hate these stocks so much besides, the fears, all that crap. But I think that's all temporary BS. So there's my thoughts. I think all Chinese stocks are probably buys right now. But like I said, you don't have to buy them, okay? And that was just a Ghetto analysis. So you need to do a lot more if you actually want to buy some of these stocks. But they're better than freaking Tattoo Truckers Tencent. I might do another one for Corsair stock in a little bit. I need to go blow my nose, though. 10 cent worth 10 cents. So let's see some of the comments here. This is going to be exciting. Were y'all entertained by this? Are you going all in Chinese stocks now? Mike Stafford doesn't like this type of analysis. How does he even analyze stocks? He's like, DCFs are stupid. No need for a discounted free cash flow. Fufu just looks at revenue growth. That's all you need to do. Well, according to the 3 stocks we looked at, I think didn't Tencent have the fastest revenue growth? Just buy Tencent, bro. That's it. I bet Brooklyn Stock Shop doesn't even know. Oh, that guy's a freaking idiot. What? Just when the stock goes down, you buy it because it goes back up. That's literally his level of analysis. Or it's the future. Yeah, Baba's insanely cheap. This is just crazy to me. That's why I'm not worried. I mean, y'all laughing at me, but whatever. So apparently my bathrobe has a YouTube channel. Strongman, have you shown us how much you've lost on Bob? I've lost $0. I haven't sold it. I mean, come talk to me in 10 years, buddy. Let's see. Alibaba, my truck stop. Let's see. Can you do a tattooed chef model? So I actually can't. It doesn't work in that model because the company's not profitable. That's why I say I don't touch that crap. Because there are ways to value companies that aren't profitable. You can use EBITDA or freaking price to sales and all this crap. I don't do that. Okay, I'm an accountant. I don't play around with these little stupid little tricks. To me, it's not even worth putting my time into. How you doing, baby girl? Pretty good. I'm on vacation doing YouTube videos. China's suffering from population collapse. Yeah, they have low birth rates. So does Europe. And even the U.S.'s birth rates aren't that high either. So that's going to be an international problem, a global problem. That's not just going to be in China. And they still have a much larger population than basically every other country in the world. I'm going to stick to buying Tattooed Truckers Taint. Me and Lafufu all the way. You're going to be the 2 shareholders of Tattooed Taint, you and Jeremy. I only buy at all-time highs. Exactly. Y'all should just go buy Tesla. I mean, Chinese stocks went down. That means they're bad. You should not buy them. Tesla went up massively. That means you should buy it. I mean, it's common sense. All you Tesla shills think you're geniuses, man. Y'all are just a bunch of freaking clowns. Opinion on India? I'd have to do more research. I'm sure India will be, an economic powerhouse one day. But right now, I'm more bullish on China than I am India. Oh, look, it's weak. All right. I'm going to go blow my nose, and then I might come back and do a Corsair model valuation, and God help us, we'll see what that comes up with. Maybe it's a buy. I don't know. But that's it. I think China's a good deal. But I'll say this 1,000 times. You don't have to buy it. You don't have to buy any individual stocks. Seriously. I mean, I really don't have that much money in individual stocks. It's mostly in VT. Every 2 weeks, I have an automatic draft, and it goes into the VT mutual fund equivalent, VT-WAX. That's all I do. Okay, and then if I have extra money come in, I'll be like, okay, maybe I'll buy some Baba with this or something. But it's really not hard. I Googled Bussy Boy, and it's a type of soap for your butt to make it tighter. All right. Yep. So I'm going to go blow my nose, and then I might do a Corsair video. That might be it for today. We'll see. Talk to you later.